Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 3rd of May. RBA cuts interest rates. What now? The Reserve Bank of Australia cut its official interest rate by 25 basis points to ease fears of deflation. Market pricing for a rate cut surged after Australia's CPI for the first quarter missed expectations of an acceleration and instead slowed considerably. Even though some of the volatility in the latest CPI reading came from changes in the price of fuel and other commodities, the bank decided to cut rates due to low inflationary pressures. In the statement accompanying the decision, officials reiterated that the appreciating exchange rate could complicate the necessary economic adjustments. What was more important, however, was the fact that the RBA officials refrained from adding any easing bias in the statement. In contrast to the previous statements, officials did not mention that the low inflation would provide scope for further easing. This could mean that the bank has reached to an end to its easing policy and may add some support to Aussie in the weeks to come. For now, though, the unexpected rate cut is likely to keep Aussie under selling pressure, especially against the stronger euro and the yen. Overnight, China's Caixin manufacturing PMI fell to 49.4 in April, retreating slightly from 49.7 in March and missing market expectations of a rise to 49.9. Even though the index has been below the key 50 level that marks expansion from contraction in activity since March 2015, the rate of decline has eased somewhat recently. This raised hopes that the sector's prolonged slump may be bottoming out and that the world's second largest economy shows signs of stabilizing. Following the unexpected decline in the official manufacturing PMI on Sunday, we were expecting the Caixin index to disappoint as well, but given that both indices surged the preceding month, this minor slide appears more than normal to us. We still believe that the Chinese economy has started to recover somewhat and that the possibility for further easing by the People's Bank of China has declined. As a result, Aussie and New Zealand, that are often used as proxy for China plays, barely moved at this release. As for today, the calendar gets very light during the European day, with the only noteworthy indicator being the UK manufacturing PMI for April. Economic activity has slowed to 0.4% quarter over quarter in the first quarter, and we believe that growth is likely to remain subdued heading into the Brexit ballots. The index is expected to have risen slightly to 51.2 from 51, which is relatively low compared with levels in recent years. Nevertheless, Brexit fears appear to have continued easing the last few weeks, something that led to a strong rebound in cable. Therefore, a minor improvement in the manufacturing PMI could be an excuse for sterling bulls to add to their positions. Elsewhere, Sweden's industrial production for March is expected to have accelerated to 0.6% month over month from 0.1%. The forecast is also supported by the nation's manufacturing PMI for the same month, which surged to 53.3 from 51.7. Eurozone's PPI for March is coming out as well. We have 4 speakers scheduled for today. Bank of Canada Governor Stephen Poloz, ECB Board member Benoit Guer, Atlanta Fed President Dennis Lockhart, and Cleveland Fed President Loretta Mester. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.